couple of other things they're going to have to deal with as well, Josh, is the fact that there's likely to be in the year ahead or so an increasing move towards a war over this digital streaming space, right? There's got to be some kind of consolidation in that space to a certain extent as people fight out for that market share. And jacking up their prices is going to have some kind of sticker shock in the short term. So the only option they've got, surely, is to start cutting costs in order to maintain their margins and their situation. Have they talked about that at all in this?
Well,
in this report?
Yes. So you're right. You're exactly right. One of the things that, first of all, we have a writer's strike and now an actor's strike in Hollywood. That's actually helping them. Even if they weren't going to cut costs, the productions are frozen. So actually, paradoxically, that actually might help them in the short term. But they did specifically say that spending this year is going to be more like $5 billion U.S. versus the 5.6 billion, which was their previous forecast. And so you do have that. Hollywood kind of capital spending lower. The bigger issue, though, back to ESPN. Understand that for a very long time, decades.
Sorry, Josh.
Disney had this business where.
Let me interrupt you there for a second, because I know that Will's going to want to get into ESPN in a big way. So just on that issue of the strike, isn't actually more of a problem? Because if they're not generating content, who's going to subscribe to this new high-priced service next year when there's no new material coming through? That's actually going to be in the medium term. Is it going to be a bit of a headwind for them, isn't it?
So I think it's more of a short-term problem, but understand that Disney has 100 years worth of content, and they can buy lots of content that their subscribers haven't yet seen and bring it onto the platform. I don't think that's going to be make or break. If the strike went on for 6 months, it would be a really big problem. But I think Disney will be okay. They may have to shift some of their box office openings back further. They may have to rush some productions when they do come back online. Maybe a season that was supposed to be 10 episodes might become 8, that kind of thing. I don't think that's quite a crisis, given how much content they have in their library. I think they'll make it through. But let's talk about the sports side. This is really the most important thing right now. What they do with ABC, which is the linear TV network, which again is in decline, and what they do with sports, ESPN. So ESPN has been in this situation where Disney was getting $7 per U.S. cable subscriber, whether you watched 100 hours of sports in a month or 0. It didn't matter. They automatically got $7 a month from, are you ready for this? 100 million cable subscribers in the United States. Think about that business every month, $7, 100 million people. Now it's more like 70 million people. Over the last 10 years, we've seen 27 million U.S. households cut the cord. That's a lot of revenue that's A, gone away, and B, probably never coming back. What do they do?
They're doing the right thing,
because
Josh?
now, every couple of years, go ahead.
I was just going to say, you don't think they're doing the right thing, though? Because what else can you do, considering all the things that you're mentioning? If, Iger's saying, OK, we're going to have this ESPN bet partnership, we're going to bring in Pat McAfee, we're going to offload perhaps the good talent, but the highly expensive talent, and then try and, gear it towards the more digital kind of online content and scoop up all the bettors.
I didn't tell you the worst part yet. Every 2 or 3 years, a major sports league comes up for renegotiation for their television rights. So it's the NFL, and then 2 years later it's the NBA, and then it's Major League Baseball, and it's one after another after another. And every time there's a price war. There's a bidding war. How is ESPN, as a standalone business with declining subscribers, going to seriously now bid against Amazon and Apple and YouTube, which is Google? So they have never had this much competition before to pay the sports leagues for the rights to the games. And if they don't get the TV rights to the games, there's nothing here. Nobody is subscribing to watch any of the other programming. It's great.
And just wait
the
till Saudi gets
documentaries,
involved.
the news, it's great. But they need the games, and the games have never been more expensive, and they have never had less subscribers to spread those costs out over. So that's why the stock has lost $150 billion in market cap since 2021. They are in a very tough spot, and it's not clear what they do to solve it.